The world economy is slowing down. In just the last couple of months, the United Kingdom, Japan, Ireland, and Finland all entered recession territory. Not to mention that the second largest economy in the world, China, is facing their own issues. Their economy is slowing down and their real estate market is in shambles right now. Now, while each country is facing their own economic issues, there are two common denominators amongst pretty much every country going through this recession or economic slowdown right now. Number one is the cumulative effect of the high inflation for the last couple of years, which is now leading to an economic slowdown because of a slowdown in spending. And number two is the impact of the higher interest rates on the economic growth of the countries. And the reason why I want you to understand this is because, well, for one, while history doesn't exactly repeat itself, it does rhyme. And number two, the United States is not immune from these exact same issues. I mean, the United States has been facing high inflation for the last number of years, and these high interest rates are starting to take an effect on the economy. But as of today in the United States, the economy is still strong and the American consumer is still spending, even if it means they're spending money that they don't have. Now, instead of just trying to guess what the impacts of these spending patterns are, let's take a look at what's happening in countries around the world. If we go back to 2022 in the United Kingdom was facing record high inflation, and to keep up with this higher cost of living, you saw more and more citizens in the United Kingdom turn to things like credit cards to finance their spending and make their purchases. By the way, those articles that I just showed you were back from 2022. Well, by the time 2023 came around, sustaining that type of spending in the United Kingdom became even more tough because now you have the cumulative effect of the high inflation, which means that now people have to spend even more money to pay for the necessary expenses like groceries and their rent. And then on top of that, you have the impacts of the higher interest rates. Now sure, there were some months and some seasons where spending was stronger than others, but in general you started to see that spending slow down. Well, towards the end of 2023 and into the beginning of 2024, that pattern did not slow down, it got worse, and that's where you saw more banks having to write off these bad loans, these bad consumer debts, because people weren't able to pay off their debts. And that was about the time where it was declared that the United Kingdom is in a recession. Now, of course, the United Kingdom economy is different than the United States, but there are some similarities of things that happened. But let's dig a little bit deeper and take a look at what happened in Japan. Now, for those of you who like to stay up to date on what's happening in the economy, I want to let you know that my team at Briefs Media publishes a newsletter every day called Market Briefs. Market Briefs is a free financial newsletter that you can read in less than 5 minutes every morning that breaks down things like the global economy, our own economy, the housing market, the stock market, and the crypto market into a fun, witty, and easy to read newsletter. You can read Market Briefs in just a few minutes, and I promise you, you're going to love reading Market Briefs. And if you're wondering, but Jaspreet, what if I don't love it? Well, you can unsubscribe at any time because it's free. So if you want to join Market Briefs, I got the link to how you can join down in the description below. In the year 2022, inflation in Japan was breaking multi-decade highs. But everybody thought it was no big deal because consumers in Japan were still spending money despite the high inflation, and this kept the economy booming. But by 2023, the economic boom party started to cool down, and you started to see more lenders in Japan start to write off bad debts because they were worried people were not going to be able to pay off their debts because of the higher spending due to the higher inflation. And then, of course, came that breaking point where consumers were not able to keep up with a higher cost of living, so they had to pull back on their spending, and of course it was declared that Japan also entered a recession. Now, the unique thing about the Japanese recession that I want you to be aware of is while the economy in Japan is technically in a recession, the stock market in Japan is actually breaking new record highs. So now, as we're seeing multiple countries and economies around the world starting to see their economies slow down, the things that I want you to remember is, of course, number one, when you see an economy slow down, that could potentially hurt trade, because if a country is making less money, they have less money to buy things from countries like the United States. Potentially. And the second thing that you want to be aware of is, well, what's actually happening in these countries, because what we have seen happen is in many different countries across the world is they faced high inflation over the last number of years. That's not unique to the United States. Well, during that time, if consumers were still able to spend, that wasn't that big of a deal. Now, if you have access to credit, like credit card debt or other forms of loans, you can continue sustaining your spending even though you have high inflation. If inflation is outpacing wages like it did in the United States, well, people can just turn to their credit cards to keep financing their spending. Now, I'm not saying that's what you should do. I'm not saying that's a good thing. It's actually a very bad thing, but that's what happens in the economic system. People can keep spending because they have access to that credit, and that can keep the economic system moving. Now, when you have the higher cumulative inflation and then interest rates start to pick up, which makes the debt more expensive, eventually you can see countries hit that breaking point. The United Kingdom hit that breaking point. Japan hit that breaking point, although the interest rate system in Japan is a little bit different than many other countries. But you start to see these countries hit that breaking point because consumers, citizens, just lose the ability to keep spending the way that they could before. And if people can't keep spending the way that they could before, well, now people have to cut back on their spending. And if you spend less money at Chipotle, Chipotle makes less money. So if people in the country spend less money, economies and businesses make less money, which then cools down the economy. So this is where I want you to understand that while history doesn't exactly repeat itself, I want you to understand the different things that are happening so you can be a financially educated investor, so you can make smarter financial decisions, and so you can understand the things that are happening in the economic system so you don't get blindsided by these things. So what I want you to do is, number one, make sure you're building your financial education. Make sure you're investing in your financial education. You're learning how to invest, and you're learning how to deploy your capital because, well, economic downturns do create opportunity, but also the second thing is I also want to make sure you are financially prepared. That means having cash put aside to protect you in case you lose a job, but also there to protect you in case you do see an economic slowdown, because that can create huge investment opportunities for you because, well, no one can predict when a recession will happen, but we know when the recessions do happen. We don't know when the next recession will happen in the United States, but we know it will eventually happen, and you want to be prepared that way you can capitalize on the economic slowdown. And the best time to prepare is when things are actually okay, instead of starting to prepare when things are starting to go down. A couple of decades ago, some of the strongest companies on our stock market and in our economy were companies like Bed Bath & Beyond and Sears. Every financial advisor would have told you that these are strong companies. Well, if you created a system where your money is consistently going into these companies because now you want these companies to fund your retirement, today you would have nothing.